Thanks to the recent pullback in tech, I think you're getting a chance to buy some of the highest quality companies at lower prices than they were trading just last week. Take Box, B-O-X, the cloud-based enterprise storage provider and mobile business collaboration platform. Here's a stock that's run up more than 30% year to date, buoyed by some very strong first quarter results. But in the past couple of weeks, it's pulled back about 12% from the highs. The stock got hit again today, and I think it's becoming pretty intriguing here. Box reported a strong quarter at the end of May, company delivering a smaller than expected earnings loss and modestly higher than anticipated revenue, up 30% year. Even better, this morning, the company announced a new offering, Box Drive, that could be a game changer for people who've been slow to move to the cloud and want to keep working from their desktops, giving you nearly unlimited file storage. But the stock keeps getting hit because high-growth tech seems to have gone out of style for a moment. So is this one worth buying? Let's take a closer look with Aaron Levy. He's the co-founder, chairman, CEO of Box. Find out more about how his company's doing and where it is headed. Mr. Levy, welcome back to Mad Money.
Hey, Jim. Thanks for having me.
All right. Explain the significance of this new product. I know that individuals I know say it's incredibly easy to download, did it in a few minutes, and it could accelerate not only the move to the cloud, but to Box's revenues.
Yeah, so the way Box Drive works is it lets you access all of your files from Box directly on your desktop. And so even if you have millions or tens of millions of files in the cloud, you can bring them all down directly to your Windows or Mac computer. And the reason this is significant is so many large enterprises still are investing billions of dollars collectively every year in traditional storage infrastructure that allows them to deliver desktop access to files in their local networks. And so what we're allowing customers to do is go take all of that legacy storage and be able to move that to the cloud to Box and then be able to access it in the same way that they have been. So this really is going to be, I think, the final nail in the on-premises storage and content management coffin. And we're very excited to be bringing this to the market. So it further bolsters our position as the cloud content management leader, delivering a really elegant experience for all of our end users and customers.
Now, Aaron, a few years ago, I was at Dreamforce, and I listened to Dropbox, and they had a very similar product to what you just described, it seems. They were valued at $10 billion, okay, where you could kind of, was like the idea of you bubble it up from the individual to the enterprise. It is hard for me to understand the valuation disparity between Box, especially now that you're cash flow positive, and Dropbox. Maybe you understand it, because I can't explain it.
It's obviously hard to compare to their private valuation, but I would say, obviously, we're very, very focused on the enterprise. We now have 74,000 business customers that are on Box, including 64% of the Fortune 500. As you mentioned in the lead-in, our Q1 was very strong. We did $117 million in revenue in Q1. We generated free cash flow, and we raised guidance for the year. So we're going to do over $500 million in revenue this year. So our job and job number one of Box is making sure that we get to every enterprise on the planet and ensure that we can build the leading way that they can manage, secure, govern, and organize all of their corporate information in the cloud.
Okay, well, one of the things that intrigues me, I know you know Schulman at PayPal. I think everybody out there knows everybody, but everyone's saying PayPal, well, Visa's going to destroy PayPal. No, Wells Fargo's going to destroy PayPal. No, it's going to be destroyed by MasterCard. Everyone told me Google has to destroy you. Microsoft's got to destroy you. IBM has to destroy you. That has not turned out to be the case, has it?
Yeah, so our job is to be a neutral platform that can work across all the different applications, devices, and clouds that our customers are working with. And so if you think about most enterprises today, whether it's General Electric in the US or Komatsu, which is a new deal that we just closed in Japan last quarter, organizations of all sizes have Windows PCs, Mac PCs, iOS devices, Android devices. They're using infrastructure from Amazon, infrastructure from IBM, infrastructure from Google, and they want to be able to have a neutral way to be able to secure and manage and organize their content so it can work across all the different platforms that they're using. So our job is to be that platform neutral approach so enterprises can have one place to organize their information, but connect to all the different devices, all the different applications, and then eventually bring in different services from those clouds into Box. And so we just think that our value proposition is highly relevant to the modern enterprise that wants to be able to use best-in-class technology to help them deliver the best experiences to their end users, but also have the best security, compliance, and robust controls around organizing their information. And that's our unique advantage versus some of the competition.
Well, one of the things that I want to get your take on is that A lot of people felt that cloud very quickly adopted in finance, very quickly adopted in technology, and a lot of people felt that it's kind of like we're now at the tail end. But Anil Bushri and Mark Benioff have come on the show, and they say there is a sudden acceleration because there are industries that you never thought would go to the cloud that are now going to the cloud. Are you seeing that sudden acceleration from industries? They weren't Luddites. They just didn't think they were didn't be there, and they're going there right now.
Yeah, I actually think there's two dimensions. There's both verticals as well as geographies that are both growing in a pretty aggressive way right now. And I would actually say financial services as an example, life sciences, healthcare, they've actually been recent adopters of the cloud. So we're seeing more and more growth from even the most regulated industries. These are industries where previously they actually avoided the cloud because the compliance, the security, the different controls that you needed weren't ready in the cloud. And so in the past couple of years, we've been seeing an accelerated growth rate in some of the most regulated customers, even including the federal government. I was just in Japan last week, and now we're seeing a pretty strong acceleration in international markets. So if you think about it, as a global cloud provider, there are completely new regions and markets that we're able to enter that enterprise software companies maybe 10 or 20 years ago couldn't as easily serve. So it's a global opportunity. It's an opportunity in businesses of all sizes and in all ranges of industries.
All right, one last question. You have been known to speak your mind on the immigration ban, on some other issues politically. Has it hurt you at all in getting federal business?
So far, it hasn't. I think that certainly our customers, federal and non-federal, respect the fact that we have clear policy points of view. These policies are ones that we think are going to drive our innovation and our growth as a company. Immigration is one of those. Encryption is another, and various issues just around the technology industry. So the federal government, I think, recognizes that we're going to have strong points of view on that, and they respect that, as well as our customers all around the world. So it has not slowed down our growth, and in fact, many of our customers respect our point of view.
All right, well, congratulations on the new product and on the positive cash flow and aggressive revenue growth quarter. Aaron Levy, Chairman, CEO of Box. Great to see you, sir.
Good to see you.
It's an inexpensive stock. A lot of the companies that they're partnered with should just go buy them, but he doesn't want to sell. He doesn't need to sell. Young guy with a good company. Aaron Levy, Chairman, CEO of Box. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.